Welcome to Quilter Cheviot Markets Uncut podcast, your weekly insight into the topics and trends that we've been exploring for you here at Quilter Cheviot. Remember, so you don't miss future episodes, be sure to hit the follow button on whichever streaming platform you are listening on, or by following hashtag QC Weekly Comment on LinkedIn. I'm your host this week. My name's Simon Doherty, Head of Managed Portfolio Services based out of our London office. And this week, I'm pleased to be joined by regular podcaster extraordinaire Richard Carter, our Head of Fixed Interest Research, and Jarek Pominkiewicz, one of our equity research analysts specialising in capital goods and industrials companies across the UK, Europe, and the US. Good morning to you both.
Good morning.
Now, Richard, I'll turn to you first, if I may. And with this being the first Markets Uncut since the end of the third quarter, it's worth touching upon a broadly pleasing quarter for investors, with equities in particular performing strongly, led by the tech sector, as well as trade tariff developments. However, markets have been confronted by a barrage of significant political developments in the first 6 days of October, not least the US government shutdown. Can you bring our listeners up to speed on what's going on across the pond?
Yeah, we often talk about sort of potential US government shutdowns, and then normally you get some sort of last-minute agreement. They never happen. This one's been different. We are, 5 or 6 days now into the shutdown, so there's been, I think, sort of 750,000 government workers furloughed, and you're not getting things like economic data, so we didn't get non-farm payrolls on Friday, and it's a bit of an impasse. It doesn't seem like there's going to be any resolution in today or in the next few days. I mean, basically, Democrats would like to see more healthcare spending, so extension of tax credits in healthcare. And the Republicans are very much opposed to that. And it's a bit of a sort of, battle of wills to see who will blink first, and sort of watching the polls and opinion polls and the public's view on who's to blame for all this and who should basically make a compromise. So as of now, no sign of a deal. Worth pointing out, though, very important to stress, this is not a debt ceiling kind of US government debt kind of problem. That's all kind of was agreed and resolved a few months ago. So this is very much about getting the US government, the essential services, back to work.
Great. Yeah, it's also worth mentioning there have been 10 government shutdowns since 1980, and on only 2 of those occasions have we seen US equities decline over that period. How have markets reacted to this news?
A bit of a shrug of the shoulders, to be quite honest. I mean, it's concerning that we're not getting economic data, so a little bit, flying blind, particularly around the US jobs market. But overall, I think the expectations are that the Fed's going to cut rates again pretty soon. The shutdown won't affect that and may even make it more likely. So as of now, markets seem pretty relaxed. Obviously, if it drags on for several weeks, that may change.
And obviously, we saw a shutdown under the first Trump administration back in 2018-19, which was the longest of those shutdowns, lasting a total of 35 days. Interesting that we actually saw double-digit equity gains from the US stock market during that period. So, yes, I think we'll keep a close eye on these developments. But it's not the only significant political news that we've had in recent days. A big announcement in Japan as well as France over the weekend. Can you update our listeners on those?
Yeah, so it was a big weekend of political news. So in Japan, they're going to have looks like they're going to have their first female prime minister ever. So Sanae Takaichi was elected leader of the ruling LDP party. So over the next few weeks, there'll be a parliamentary vote where she'll become prime minister, and that was very much a surprise. She is thought to favour very sort of pro-growth policies, so more fiscal spending, low interest rates, and that's led to quite a big reaction in Japanese markets. Sort of weaker currency and a big rally in stocks. I mean, it's it's a moot point whether she can really implement policies like that at a time when people are worried about Japanese government debt levels, when there's been rising bond yields at long end in Japanese government bond markets, and when there's a bit of an inflation spike going on. So we'll see if she actually implements those policies as she's thought to favour. But there's been, so quite a big reaction in Japan so far.
Excellent, thank you. And in France, we've seen some further government developments too.
Yeah, we're effectively in the middle of a ongoing political crisis in France. There was a new prime minister appointed recently, as people will recall, and he hasn't lasted very, very long, unfortunately. A new cabinet was appointed over the weekend, and that was seen as very much a real disappointment, just a continuation of the previous cabinet, which suggested there wouldn't really be any change in the government policies or stance. And so the opposition were threatening no confidence votes, which is how we got to this situation in the first place. And so the prime minister has decided to resign. So it's a very worrying situation in France. They've got debt problems. Their bond spreads to Germany, which is a closely watched measure, they are rising or widening, and we don't know how the resolution is going to be found. Potentially a new prime minister with the same problems, or potentially new elections. So Macron very much under pressure at the moment.
Certainly an area, as you say, to monitor closely. The volatility that we saw at the long end of bond markets, particularly in Europe, France, Germany, and the UK over the third quarter was certainly a notable trend and one that we keep a very close eye on. But thank you for that, Richard. Very helpful. And Jarek, if I can turn to you, and if we stay on the subject of Europe, and this has certainly been a theme for much of 2025, we have seen a significant development in Germany too, with the approval of a budget that will see sizable loosening of the purse strings there, and a commitment to increasing spending in areas such as infrastructure and defence. Can you provide listeners with an overview of these developments, and what does this mean in practice?
Yes, Simon, thank you. Yes, it's very material. We're talking about the 500 billion euro fiscal package and that Germany has planned to put through, focusing on infrastructure. And just to put it in context, that's the money that they expect to spend over the next 10 to 12 years per annum. That's a step up of spending equivalent to about 1 percentage point of German GDP. So that's pretty material. It will be spent across a variety of different sectors, but we do think that rail is going to be one of the largest recipients here. Recent press report issued by the German Ministry of Finance points to about 100 billion, so about 20% of the stimulus to be spent on modernizing rail network and the use of digital technologies in rail over the next 5 years. So it's a pretty large amount. And what does that mean? So 100 billion over 5 years, that's about 20 billion per annum. That's larger than Deutsche Bahn's spend last year on capital expenditure. So, it's very, very material. And here we think, from stocks under our coverage, we like a name called Alstom. It's a French railway manufacturer. They generate close to 10% of sales in Germany. And we think their benefits through their exposure to signaling, as well as probably to some degree on rolling stock. But of course, spending on infrastructure is not just rail. And we think that the second derivative of the stimulus will be the positive impact on the stimulus on manufacturing in general. And typically, the exposure across capital goods companies in Europe to German sales is somewhere in the high digits region. But one of the stocks that we do cover very closely in Europe is Siemens, and their exposure to German sales is much larger than that, is about 15%. And they generate some of their sales through their rail business as well. The other segments are industrial automation, electrification, which I think will be the strong recipients, strong beneficiaries from the stimulus. So it's also another name that we like in the space quite a bit.
Excellent. Thank you for that. And it's worth mentioning as well that European equities, incorporating a large number of the individual companies that you focus on, have performed very well over 2025. But if we look at the third quarter just gone, there was a pausing for breath, if you want to call it that,
Yes.
versus other markets which rallied very strongly. Obviously, I talked about the tech influence in the US, but also in China and emerging markets as well. Do you think this news could be a catalyst for a renewed focus from investors in Europe?
Yes. I look, the reason for the pause is the uncertainty around tariffs and what the actual impact will be on European companies in terms of their ability to push any price increases required to mitigate the tariff headwinds. The communication from different companies has been, a little bit guarded, I think, at this point, and there's the complexity attached to the different tariff regimes has not been helpful. So we have the investors are a little bit hesitant at this point. They would like to hear a little bit more from the different management teams what they think the impact is going to be. And I think during the incoming reporting season, which will start halfway through October, I think we'll hear a lot more. My sense is that the general feel is that the market, the companies expect there to be little pushback in terms of then being able to increase pricing of various products that they are selling into the US. But the question is whether they'll be fully offset the headwinds or not. And I think this will be, once we get a little bit more clarity on this side, there should be kind of a lot more than clarity going forward as to how the earnings will progress. But it's not just tariffs that I think should be the story with regards to capital goods. Manufacturing in Europe has been quite soft over the last couple of years. And I think, the added clarity should help, improving optimism over the coming months and quarters. And then looking a little bit further, I feel there's the boost from the German stimulus. So I think, on balance, the outlook for this space is a little bit more positive than it was over the last year or two.
Thank you. And as you say, a number of individual companies that you're keeping a very close eye on, and a quality opportunity set across Europe more broadly, highlighting that there are opportunities away from the US market,
Yes.
which obviously does garner the largest amount of attention. That's great, Jarek. Thank you. And thank you to you, Richard, as well, for those insights. Also to you, our listeners. And if you enjoyed our discussion on the podcast today, please review the show now, wherever you're listening, share it via social media, and tag us using @Quilter Cheviot. And equally, to make sure you don't miss a future episode, please tap the subscribe button as well. We'll be back next week, but in the meantime, do head over to our website, www.quiltercheviot.com, where you can read the accompanying market overview of today, as well as subscribe to our weekly comment newsletter. And it's worth highlighting that on the website, you can stay up to date with our thoughts on market news. Clearly, as we've outlined, a lot going on, as well as more thematic industry insights. And you can also keep an eye on our upcoming events and webinars. Alternatively, do keep an eye out via our social media pages for updates on these as well. And lastly, if you have any questions you'd like to ask one of our experts for our next podcast, then as always, please ask them via the weekly comments page on our website. The team do love to hear your questions. That's it for today. So thank you once again to Richard and to Jarek for your time. and of course to all of you for listening. And we look forward to seeing you next time. Thank you.